Okay, so I have my Bitcoin chart here now. So let me share it, and then I'll open up a blank. There we go. Everybody sees my mouse going side to side. Okay.
Yes.
And yeah, so when this finally breaks, when the bear finally breaks here and the bull kicks in, it will go from naught to 100 very fast. Okay, so now I'm going to open up a new page, new layout. Change it to BTC. I'll go to Binance because I want the history. So I'm gonna do. Let me ask you a question: Is everybody reasonably familiar with patterns? The W pattern, the M pattern, the head and shoulders, reverse head and shoulders, the cup and handle, reverse cup and handle, bull flags, bear flags, wedges. Are people? Is there? How are people with
I've
them?
heard of, yeah, I've heard of them, Roy. I've heard of double bottom, double top,
Yes.
cut,
Yeah.
head and shoulders. I've heard of it, but I'm not sure of how to sort of identify it easily. Sometimes it's difficult to identify what it is, right?
Yeah. Well, yes and no. Sometimes yes. Yeah,
Mm.
yeah. The straight answer is yes. Um, I think you could probably say it's harder to identify whether it's a valid one or not, because
Right. Okay.
you can get a head and shoulders, but whether it completes itself, becomes valid and completes itself or not, is harder to know.
Mm.
And that's part of the conversation we're going to have today. And again, the arcs will fit into that, because depending on where your W happens, like if you get a W on your Elliott wave pump up and it's halfway through the Elliott wave, there's a good chance it's going to complete itself. But if you get a W on the way down, like a W would be it'd be an up, an up, an up. To complete it, it'd have to go up. It's quite possible when you get a W on the way down, it's not going to complete itself. So your W's are more likely to complete themselves on the way up, and your M's are more likely to complete themselves on their way down. Just as a general rule. But I'll talk you through them. So here is Bitcoin on the day. Let's see. Let's go to the week. How far does it go? Okay. 30th December 1919. Okay. Okay, so now one of the things when you're looking for patterns as well is that you can turn things upside down. So when you press Option and I, it turns things upside down. So here it is upside down. I'm just looking to see if I can see something. Like here, here is possibly a W. I'm not sure whether I would classify that as a W. I think this is dropping too much. But this could be. But we won't do could be's. We want clear stuff today. Okay. And then if it was, it would mean a pretty big dump all the way back down to 29,000, which some people are talking about is if it wanted to really dump down, they're talking about it going back down to 29,000 or 30,000. And technically, the bull run is still on as long as it doesn't break 29,500. So if you got that drop all the way, there you go, 29.5, there we go. It'd be from the top up here, it would be a 60, 57% drop. And again, you can see the support line of it here, yeah? So that's some people are now talking that it could go to that. So maybe this could be an M, or something like that. It'd be a W upside down, but an M. But anyway, I don't think it is. But that's where some people are getting a bit panicked. They're getting a bit panicked that it could go back to this, you know. Okay, but let's go to the daily. Okay, so then we're going to scroll. Okay, so now here is, you could call this a bull pennant. Okay, something like that, yeah. And the reason why I'm calling it a pennant is it's wide at the opening, and then it moves in, and the angle that it's at. Okay, where if it was more level, if it was more level, I'd be calling it a bull flag. So this is a bull pennant, yeah. And again, I'm zooming. This is on the daily, so I'm just looking at the bigger ones first. And generally, the bigger the time frame, the more solid the potential pattern is. So how do you measure this? It's really very simple. Is you look to where there's a bottom, and again an impulse, and then you copy it or you clone it, you know. And again, is some people would put it at the bottom here. It's more conservative because it allows for this. There's a target there which it hits. Some people would put it here, and again, look at that, spot on like that, yeah. So now when you're measuring out patterns, is you don't want to put it here, and then also go to here, because there's no, you're leaving no fat on the bone, so to speak. Is if you put your target here and it doesn't meet it, you won't be, unless you manually do it, you won't collect your profits. So you're better off bringing it down even a little bit. And this is why some people have put it here, because now what's happening is that you're taking the fat off the bone. So when you put your target up here, look, your target's up here, and you're leaving this space, so you're collecting your profits a little earlier. Because if you're always trying to call the top, is more often than not you won't get it. So unless you're watching it and you can see your trade takes it, you're going to have to manually take it. So just as a thing that when you're pattern trading, is you got to leave a little bit of fat on the bone. Or some people will do this, and then they'll even just pull it down a little bit. You know, but still, look, I'm still looking at this here, yeah. So just to be aware that you're not trying to get all the way to the top, yeah, because it very seldom happens. More often than not, you miss it. Okay, so this is one. Is what else can we see here? Is now this pattern here is an M. An M. Here's an M. I like to use. Where is it? I like to use this here. I like making them pretty, you know. So you go to the bottom, and then you go to the top, and then I like to run a line across. Pink is in for me at the moment. So how you measure it is to the top, to the bottom, okay, and then again you leave a little bit there. You might even leave a little bit more, and you'd put your target in there. So now, while this one validated itself, this one was invalid. So I think the reason is obvious why it's invalid is because, again, it's part of an impulse, an Elliott impulse wave. This is 3. This capitulation here, this ABC correction is down from 3 to 4 on the Elliott wave, and then up to 5. So when you know that and you understand that, is you wouldn't be looking at this M pattern and thinking, oh God, I'm going to go in big here, and you get stop lossed out. What you might do, again, a little bit of maturity in the market, and you knowing the way things go, as in regards to the M's, is M's have a tendency to, here's the M, is when you start to see the other M form, you know, and you start to see it coming down, you might put a trade in here and you do a smaller trade that will go, a smaller short that will go from here to there. And while that might not seem very much, and you'd be seeing this on the daily, that's why if you went here, is the trade is worth 5.4, and again multiplied by 10x is a 50% profit, yeah, and that would be played out over 1, 2, 3 days. 3 days that would be played out over, yeah. Just if you it would be a way to find a trade here by trading patterns and looking at the pattern the way it's going, and okay, look, you take a measure of the support. Where's the support here? You know, and then you go there. Then you get to mark your target. Yeah. Personally, I wouldn't do it, but I'm just trying to show you where would be a possible trade here if you began to recognize this is moving in an M. Even if it wasn't going to validate itself, you still notice that there's a journey from here or here down to here. Yeah. Okay. Has anybody any questions? Okay. So now,
if you pull the first pattern, the first pattern that we reviewed was he one the flag?
This one here, a bull pennant.
A bull pennant, okay.
A bull pennant. Where if you think about a bull flag, it'd be more like that.
Mm-hmm.
It'd be more like that. Yeah. And then this is a bull pennant. Where a wedge, a descending wedge, will be more like that. So it's coming down more. Okay, and again, some people might actually call this a wedge. You know, it's sort of, you know, it's, personally I think they're very similar. I go between wedge and pennant, but they're degrees of difference. So flag, pennant, wedge. If you think about a the arc of it, so to speak, you know, is level is flag, pennant, and then wedge. So you're something like that. Anyway, not such a big deal, yeah. And these all break up, yeah. Now look at this. Remember, we're looking at the context of things as well. We're looking at the context of things as well. Is here, look, we have another M. We have another M. Now, why would you be confident about this M? Why would you be confident about this M? Because we've topped out, is we're now into a correction. Here's the A, here's the B, because look at tops, it's capitulating, and then confirmation of it. So if anything, this you could be selling yourself a little short by going on this short, because you go in and you set your target, you get your target, and then it just keeps going. So you'd be kicking yourself if you took your profit here while this kept going like this. But yet it's a valid M, and it has validated itself. And the profit on that would be, that's about 9%, and 10x would be 90%. So okay. So now here is a W. So here is a W. Okay. So now the question is why is this W invalid? And there's a pattern here to make the W's. I think this is here. This is it here, yeah? Here's the top, the bottom, the center, the bottom, and then the top. And this is just the, this is the tool. There you go. So there's that there, yeah? Again, it's a little bit, they're not great. Is an easier way to do it is simply just look. You have your top here. You have this here. Is if you put this line across like this, okay, and then you bring it down to the lowest point. And again, you leave a little bit of fat on the bone, and then there you go. There's your, even pull down a little bit more. There's your target, but it's invalidated. Okay. Now there's two ways people trade this. Is some people will trade. They'll only trade from here to there, which is what I'm doing. From here to there. Some people will go all the way up, and they'll trade the full length of this. Okay. Or you can trade the length of this. The reason why you would trade the length of this one, it's more conservative, so you're more likely to hit your target. Where this one is, it's less conservative, but even still, if you want to go in on this one, you still want to leave. You still got to leave the fat on the bone. Is you're not trying to collect at the top all the time. So now, why is this one invalid? Why did this one invalidate itself? And what would give you...
It never reached the target, right?
Yes, but why did it not reach the target? Why? So if you look at... Pretend this didn't happen. Pretend all this didn't happen, so to speak. Is if you look at this, look how big this drop is. Does that make sense? So it's a drop. It's a drop. Is now there is the ABC is here. So now you're going to have the impulse wave kick off, yeah. But now the question is why is that not going to? Why did that not complete itself? Now let me give you a little bit more context here.
That could be a mini head and shoulders too, no? I'm not sure.
Yeah, absolutely, yeah. Just one sec. Okay. So this is the daily arc, yeah. Here we go. Okay. So now I would suggest, to correct myself, this is not C. It is A, B, C. This is C because it's lower. Okay. Now this is why this didn't go up, is because, and again, easily, I'm sure there's people that could have got caught here. Is it's easy to reckon that this is C. Okay. But then you have this coming up and going, it goes sideways, it comes back down, and then you have a lower point. So this, and it doesn't matter how much it's lower by, this is a lower point. And in that makes it C. So that's why that went sideways. And very difficult to know beforehand. And this is how tight it can get at times. Look at that space there. So now here this is now the C, where this is now a new Elliott wave, 0, 1, 2, and then there's 3 pumping away. Now look how close 2 also comes back down, so that's why this didn't validate itself, is because that wasn't actually C. This was C. So therefore, is this goes sideways is until it comes down and actually completes itself. Where a lot of people, and even myself, they were saying this is C, is until I saw this and looked a little closer, is when this is C, now you can expect it to go up. And I'm sure an awful lot of people here expected this to validate itself and to create an arc here, where this arc is a very, very small one compared to the big one here. And that's just the way it played out, yeah? Is where do you see the head and shoulders?
Oh, it was where you put the line. Yeah.
The head and shoulders here. Ooh, this one, and this
Yeah.
one. Is it? Here,
Yeah.
here,
Yeah.
here. Okay.
Yeah.
It would be
No.
It will be a difficult one. It will be, I'd say, a close but no cigar. There's absolutely no problem putting them like this. Is I would suggest that you have a shoulder here, you have a head here, but then what happens is that you have this spiking down. So this takes the price action lower again, and then it just doesn't seem to come up. It doesn't seem to come up and complete a shoulder. It never seems to get there. So, okay, you be patient and you go, let's wait and see if this shoulder can complete itself. So it goes to here, and then rather than actually coming back down, it floats away. So I'd say it was a potential, but you're looking at it and going, no, that's not going to happen. And also, is why would you also say that this most likely is invalid? Look how low we are. Look how low we are in the price action. Does that make sense? So if we did this, and we take the length of this, and then we bring this down here, again, leave a little bit of fat in the bone, it would bring it down even lower again. And then the question is the price action going to break down this low? You'd be looking at this support line and going, look how solid this support line is. Look how close this came. Look how close that came. Does the price action look like it wants to go any lower? So it'd be you'd probably say no. Do you get what I'm saying there? But your eye is correct in seeing the potential of it. So
Right.
Okay. So any more while we're here? I know we're on the daily, so there's not that many. So now
Could we potentially say that fall from B to where the correction started could be a falling wedge, kind of like the opposite to what you did over there at the very beginning, but on the opposite direction.
This here.
Uh-huh.
Yeah, there's definitely a channel. There's definitely a channel. Let's have a look. Let's have a look at what the channel will be like here. Yeah. Is you could put that in there. I'm trying to see if I can make it now. I don't want to be grasping at it either. If you get what I'm trying to say. What I'm looking for now is the trades in it. I will put that there. Okay, so look, here's a touch, there's a touch. So there's a good indication of the touches. There's a confirmation of the touches. Here's a confirmation of the touches. So here's a trade up. Here's a trade down. Here's a trade up. Here's a trade down. sideways, sideways down. Yeah, yeah. I can see it as a channel. I can see it as a channel more than a wedge, if that makes sense. If it was a wedge, it might be, well, maybe. You get what I'm trying to do here?
Yeah, yeah, yeah.
Yeah, yeah. You could put it in. Personally, I wouldn't, because there's too. If you look at this, there's too many potential trades being lost in it. If you get what I'm trying to say. Here's a trade up. Here's a trade down. Here's a trade up. Here's a trade down. Here's a trade up. The wedge here is missing a lot of those opportunities. If you get what I'm trying to say.
Yeah, of course, of course.
But again, I commend your eye. Yeah, like I wouldn't say no to it, but I would probably put in tighter channels to give me a better, give me more options to trade, if that makes sense. Okay.
Thank you.
Ah, you're very welcome. I like the way you're thinking. So now let's go down into the daily. Let's go down into the daily and see what we see. So we're gonna. Do we get many more options? No, not really. Let's go into that is the same one. The 4 hour even. The 4 hour will give us more options. Okay. Okay, so now we're going to zoom in. I'm going to zoom in and we should be seeing a lot more. Okay. Yeah, look, there's a lot more going on there. So I'll move this off. Again, so this is a bull pennant. Again, that would have been a mega trade to go in on it. If we're going to put an arc on it, is here we are. Here we are here. And this would be the 4 hour arc. And again, we'd be trading the Elliott waves. We'd be trading and then the ABC correction. And we'd be trading the swings. We'd be trading this swing. So let's put the resistance line in there. Let's put a support line in here. Okay. There we go. And again, we could put the wicks in, but I'm going to leave it there and catch this in. Yeah. Okay, so now let's go through this in a little bit more detail. Is here it looks like, and again, if you see stuff yourself, call it out. Yeah, this is a bull flag. And then bring it down to here. Okay. Again, some people might bring it all the way down to there. Just see that as the starting point. That two works there. Okay, now because I know this is a breakout, personally I'd put it here. On this one I would, because I'd have the confidence to know that this is a pump and it's going to go. So I would put it here. If I didn't think it was going to be as much volume, I would play it safer and I would put it here. Okay. But again, that's back to the context of what's the context we're working under. And again, if I was going to do the long one, I'd also still go, look, let's be really conservative here and put it at the bottom of the line. Put it here like this, and then look there, it completes. You get a lovely profit here, yeah? So now when do you read this? When do you know when this is a bull flag? At what point in it do you go, God, this could be a bull flag? So look at, you've got the pump, and then you've got the retrace, you know, and then bouncing along here. So it's confirming this line very clearly. But you see when it comes up to here is, and then it touches off it again, is you can go, okay, this now has set the channel. This now has set the channel. So you're getting a very solid confirmation by the time you're getting these spike throughs, and then again it retraces. Spike throughs, look, drops back down very, very clearly that it's a channel and it's a bull flag. So again, you can have the confidence that that's it, you know. And then where do you go in on the trade? Again, this is where I differ a little bit. And I'm going to show you this. There's a strategy for trading where you trade the breakout, okay? And basically what happens is that, and you're going to see this a lot, and I'm going to point it out to you, is that look at this candle. This candle is the breakout candle. And you don't go in on this candle, because more often than not, when you get your breakout candle, you get your retest candle. Because in the moving averages, is you pump up, it gets tired, so the moving averages need time to catch up, so you get a retrace. So now after your retrace, when you get your next candle that goes above the breakout candle, so this is your confirmation candle. So this is where you go in. So this would be your entry point for confirmation, that you go in here and then up you go. Okay, now you got to be really disciplined doing this. But so if you went in here and put your stop loss just underneath, you get knocked out. If you went in here, you said, oh, this is the breakout, I'm going to go in here, you know, and you bring your stop loss below the resistance line, is again, look at the retrace candle. It comes down, it knocks you out, and you're like, your head is wrecked. And you're putting in 5%, 25%, 15% stop losses. It knocks you out, turns around, goes back up. And it break your heart. Break your heart, yeah. So
would the same pattern apply on a different time frame in terms of the waiting for the retest?
Yes, yeah, it happens. Yes, it does. Yeah, I'm going to show you loads of them. Yeah, it happens a lot.
Okay. And another question on the channel: is there any type of rule of thumb in which each side of the channel needs to be touched to confirm that this is a real channel, like kind of like three times on each wall or something like that?
Yeah, you don't need to wait till 3. You don't need to wait till 3. Is as soon as you see the first one here, is you've got this one. There's more than 3 here, and you've got this one and the retrace. Is you can be pretty solid that it's most likely going to be a bear flag, and also this part of the arc and the pump. This is where you get your bear flags. There's certain phases of the pattern where you get bear flags more likely, and this is it. This is one of them on the way up, you know. So you already have in your head that there's a potential bear flag here. So this is just proving itself. So you're getting confirmations along here, but you're looking at how many times does it hit. Like this is hit a lot. So and often you get the 1, 2, 2, 3, 3, 4. So a lot of the times is you get three touches, and then the 4th time off goes. Now I know there's lots more than 4 here, but in the wave 1, a second wave, I know there's lots of touches. The 3rd wave, I know there's 2, and then the 4th wave, up it goes. Do you understand? So generally you're looking for at least 3 before you can expect a breakout, but you don't need 3 to confirm it. Okay. Okay. So that's the bear flag, and again, validated, and we hit the spot. Is if we had come and rather than gone down here, we said, look, let's play it a little safer. Let's play it a little safer and do here. Okay. And then we do here. Well, if we're going to be more conservative, you don't put it all the way back here. You you still leave a little bit of fat on the bone, so to speak, and then you put it here. So your target's here. Look, you hit your target here. Excellent. But now look what's happening here. Okay. There you go. So, so now here is a wedge. A wedge here is, again, you take your my right click. I have to get a new mouse. There we go. You clone. And again, you pop it up. Okay. And again, it's validating. You're hitting your target. Okay. If anything, is again I'm playing it conservatively to here, is because it's part of a bull run and there is a parabolic nature to it. The pumps are stronger. Is you put this in here, you're still hitting profit. So it depends on what phase of the market you're in. Is where do you feel more confident about putting your bottom here? So I'm showing you the more volume one, and then the more conservative one. Okay. Again, personally, I'm showing you these because this is how I started trading myself. Is I don't necessarily use these anymore, unless they're on the much higher time frames, and I just use them as a form of reference. I don't trade them, but I use them as a form of reference to help me confirm. It's one of the measures, one of the indicators I would use to recognize targets. So I would see something and I go, look, there's that pattern is offering that target. But then I'd be also using the arcs and the Elliott waves to also confirm it as well. So it's still very good to be recognizing the patterns. But there's always the challenge with the patterns. If you trading the patterns on their own, but not understanding the context of price action, this is where you can get caught in the patterns. So because they won't complete. It's how do you know the difference between one that's going to complete and one that's not? Okay. So now if you look here, is again, there's the touch, comes back down, lots of touches here. Here's the touch, back down again. So 1, 2, 3, 4, 5. Sorry, 1, 1, 2, 2, and then 3. And here's a breakout. And then look, it comes back down. If you went in on that, look, it'll pull you out of it. Is you have a candle here. Look, it comes back down. Is now, look, you have this candle here. Is it breaks out, but now look, it also back tests. So you can see, even though it came here, it went down first, it back tested, and then it went up. So the fact that you're seeing it back tested is a very good sign. And then when you see it break this red candle, that's your confirmation. And then that's when you go in. And that would be the confirmation of it. Okay. Now, personally, if I was to trade these now, is I know it's going to break up. So personally, what I would do is I would look, and it's getting tighter. It comes back here. Is I would have either gone in on this candle or waited to see what this candle wants to do. And when I see this candle breaking through here, once that candle starts going back up, I would go in here and I'd pull my stop loss down about here. Or I wouldn't do a stop loss at all. You know, and I would just let price action do its thing and just let it go. So I would trade on the position rather than on the confirmation. Because if I'm going to trade on the confirmation, I have to put a stop loss in, or else I have to go deeper into my stop loss to get past all this. So just with experience is I can see this, is I know that it's going to break up. I just know where it is within the context of the pattern. So I would go in at a lower point and pull my stop loss down. Now, if I didn't put a stop loss in at all, it's still my liquidation point. It's not that I would put this trade in, then have no stop loss, and then go to bed. Absolutely not. Is when I do that, I'm sitting here watching it. Is if I see that this trade is going the wrong way and I don't like it, is obviously I would come out. I would take my loss and I would come out. What I'm saying about the stop losses is that I went into too many stop loss battles and got caught in stop losses so many times, and then the trade turned up and went up. For months, I was getting caught all the time. It was wrecking my head. So now what I do is when I go in here and I pull my stop loss down, it's with a small amount. So I'm dollar costing in. So now I've got my position and I've got it in. So I might only put in 10, 20% of what I really want to put in. I get my position. Now, when all this stuff happens and then you get the clear confirmation and then I see it moving on, now I'll put a bit of money in. I'll put some money in, and my dollar costing will bring me up to, say, here. And then again, there'll be a retrace. Look, it goes off again. I'll dollar cost in a little bit more, and now it'll bring my entry point up to here. So by the time I'm collecting on the trade, is my entry point will still probably end up where I would have put it in on the confirmation, but I dollar costed my way up. Rather than going in here, getting caught in a stop loss battle, or having to pull it all the way back and sweat while this comes down closer and closer to my liquidation point. I just don't get into the stop loss battle now. And I don't load up straight away, and then if it turns, I'm like, oh my God, this is killing me. Is if I've got a low amount here and it starts to turn down a little bit, is I'm not in a sweat. I've got a low amount in. So I don't mind if it wants to test my stop loss a little bit, because I'm not loading in. So I'm not under pressure to go, oh God, I got to come out of this or I'm going to lose a lot. I won't, because it's a small amount. So it's a far better strategy to play this than to play the confirmation with a tight stop loss, because there's so many times you'll get caught and then off it goes. But what I'm describing is you need to understand the context of trading as well. Not just understanding the pattern, is you need to know that this is actually going to go up. So that's why where the arcs come in, and then recognizing the different arcs on the timelines gives you confluence. So you want to know something is going up, so you don't even get caught in it. Even if you did, remember, it's a low amount, and you've got the freedom to be challenged and not get wrecked. So it's an excellent form of strategy. So there you go. So and again, I'm going to do a session again on dollar costing in again this week. And again, it's just one of those things to just continually keep repeating. Yeah. So now we're moving along here. Anybody see another? Looking for a cup. Am I looking at a cup and shoulders or a cup and handle here? It's an inverse one, which didn't complete itself. But let's have a look. I'm going to turn it upside down so you can see it. Okay. Now it's backwards. it's backwards. But you see the handle on the cup is it's backwards. We should have the handle over here. Okay, we'll wait until we find one. Okay. Okay, so there is a W here. Now this is an interesting one. This is interesting. Here's the W. Here's the W. Now, depending on how you trade this, it can work for you or it can work against you, depending on how conservatively you trade it, yeah? So if you put this in as the top and you take all the way to the bottom, of course it will invalidate itself. Okay? Where if you said, I'll trade it more conservatively. Okay? I'll trade it more conservatively and we'll see how it goes. And I'll still go to the bottom. Again, I'm going to leave a little bit of fat on the bone here. So again, it still didn't hit the target, but you could see if it's starting to retrace, is again you can take your profit and you can get some profit. So if you traded this more conservatively, is you could still get a decent profit here and work it out. If you went all guns blazing, it's not going to happen. However, is in the context of the arc, the 4-hour arc we're looking at, is if you measured this and that, why would you know that this is invalid? What tells you that it's not going to go to here?
That it's on the way to the mountain peak?
Yeah, exactly. Yes, because look, here's the 3, 4, 5. Here's your Elliott wave. Here's your ABC correction. Does that make sense? And now here's your Elliott wave to mountain peak. Look, and here's resistance peak. Here's skyline. Your target's above skyline. It's not going to happen. You know it's not going to happen. Where you go, okay, it's still a W. Just from the point of view of a pattern, it's still a W. Is you put in your target, but then you realize, look, your target's back up at mountain peak or skyline. You go, look, that's still too high. It'd be more sensible to look for a target that's more of a resistance peak or equally I'll put in, oh, sorry, a resistance line. There you go. So look, there's a resistance line there. So now you're looking at that and going, okay, this is a W forming. I know it's going to go up, but now conservatively, where would I better off put my target? Well, I'm looking at it and going, okay, this is a strong possibility that's going to hit here, but not really get much higher. So now you bring your target down below that, down below it. Don't be trying to. Once you've got your top line, is you got to pull it below and go, I'm going to go for it here. So you're being very conservative, but you're being very conservative because the context requires it. Everybody get that? Where if you're not trading the patterns in and understanding the context, is it's too easy to be overshooting, or else going in on trades that just aren't going to validate themselves. So again, you can see why trading the arcs and the Elliott waves using the fibs is far more efficient for your swing trading. And it's not to negate the patterns. You can use the patterns to help measure your targets. So this is part of your validation of this. So it's good to recognize when you see a W, is check it. Is it valid? Will it be valid? What's the target showing you, and is that possible? And then they become part of your checking mechanism. Okay. So now, anybody else see anything when we're going along here? In M, again, in M, no. And this is a nice, if we got another nice one of these, it'd be very pretty because you go, look, it's validated. Is this one, why is this one not an M? Why is this one not an M? Why is this one not an M? Because look at the middle part. The middle part shouldn't be lower than the shoulder of it, so to speak. So you want your M's literally like they are. So you're looking for your M's. They don't have to be, again, you can have some very ugly looking M's, but they still hold the form. Where is, if you see this, is, again, I wouldn't trade that. That's not an M, because this here is lower than these points. So I wouldn't be looking to trade that. So this is a giveaway here, where this here, but then it went to here. So no. I would still recognize that this is going to drop. I would still recognize that this is going to drop. Now I'm not sure whether this could be classified as a particular pattern. Some people might call it a triple top. I'm honestly not sure. But what I would know is that when you have this pattern like this, it, to me, and also where we are within the context of the arc, is this is a spill. This is a spill telling me that it's going to go down before it goes up. So an easy way to mark this. So from top to bottom. And again, leave a little bit on the bone here. And again, there's a target that got met. Okay, so this is mountain peak. This is second drop. Sideways action here is before it comes down for third drop. So to me this was always going to happen because it's third drop. Is what does this give me? This gives me a good estimation of where third drop is going to go. Like if we really stretch it out here, look how accurate that is. Sweet. But again, you don't want to be putting your target there. You want to be bringing it up and giving yourself a bit of space so that you've got space to actually collect and take your profit, yeah? Okay, so now let's have a look at how you can get tricked here if you're trading the confirmation. This is where this gets tricky. And I think Exit Strategy is talking about this on the members chat. Why he doesn't trade breakouts. And the reason why he doesn't trade breakouts is because of this nastiness. Look, you've got your breakout candle here. You got your retrace candle here. Now look, you've got this going out now. Is when this comes in, this goes down here first. And you're going, oh, confirmation, look, broke this, confirmation, green candle, or red candle, because it's red candle at the start, but goes down, here's red candle, is you put your trade in, and then up it goes, up it goes. You've put your stop loss behind here as a form of protection. You get knocked out, comes up here, comes back down, look, breaks it again, comes back up, and then you've got the breakout. And your head is melted. your head is melted. So now the question is where would you go in on this? Where would you go in on this? Personally, I'd be looking to go in on mountain peak. But if we were looking at it as a pattern, is this has happened, this has happened, is this comes up, is again this is the testing the top again, is this is where I would be looking to go in. So that I'll catch here knowing that this is coming down. So this is a sweet spot to come in and catch, and then down it goes. Okay, and it's a safer one. And again, dollar cost in is, I wouldn't put a stop loss in, is a dollar cost, and then I'd leave the space to let it do its thing. Do you see when it starts dropping down here? I bring my stop loss to my entry point. So once this goes down here, is now my stop loss is at my entry point. So I'm not going to lose anything other than a small amount of interest on a small amount of money. If it came back up. So it goes down, look, does all this business. Okay, now look, it's breaking out. I might dollar cost in here, and again, look, it goes back up, and I'm like, I'm still safe. But even it tricks me because I'm thinking it's breaking out. I dollar cost in, it comes back up, and I call it names. But then it turns around, and it starts going back down again. Okay, let it do its thing. Is it coming down? Here's a bounce. It retraces. I dollar cost in again. And as it comes down to here, I'm taking my profit. I'm taking my profit. And it's quite possible I'll be taking my profit on this yellow line because, again, it is a support line. It is a support line. So if I take my profits here, I know it's done this, but again, think about being conservative. And you go, Roy, look at all those profits that are lost. It's not that. Look how many trades you're winning. So do you want to win 3 trades and lose 10 or lose 7? Or do you want to win 9 trades and maybe lose 1? So if you're a bit more conservative but staying in the zone, you're winning all the time or more often than not. So it's actually more profitable to position yourself earlier, even if it takes more time. Okay, it takes a bit more time, so you got to be patient. You know, some people want to go in here because this is where the action is. Once this happens, the actions all go. Where here sometimes is, and this is it goes quite fast, but it lengthens out your trade. So you got to be willing to be patient with your trade, for one thing, and then 2, it's your trading position, and then take your profit a little earlier rather than a little later. And again, this is a lesson I had to learn. I had to learn this lesson really hard myself, you know. So we all have our lessons to learn as we go along. So, okay, so that's that one. I want a nice. I'd love to see a lovely cup and handle or a head and shoulders coming along here. And maybe what we'll do is we'll go along and let's actually look for a head and shoulders here or a cup and handle. Again, this didn't validate itself. This head and shoulders here. No?
Reverse.
A reverse. Here, a reverse.
Mm-hmm.
No, the other, yeah. Nahela here is telling me a reverse, but she's suggesting that look, here's a shoulder, here's a head, but I don't think that it doesn't. There's no second shoulder. Okay. Now here's a head and shoulders, but again, it's not validating itself. See this one here? Like there's a head and shoulders. There's a head and shoulders. And again, this is a little bit dubious here because I know it's breaking through. But if you're going to measure it, and put a target on it, leave a little bit of fat in the bone. Okay. So now there's that there. But now that's if somebody didn't know any better, they'd be looking at it going, oh, look at this. This looks like it's a head and shoulders. We're going to get a nice short on this, and then it's invalidated. Okay, so why is it out of context? Why is it out of context? So let's put in the other head and shoulders here, or the arc. Okay, so now it would be fair to think even on the arc here, it would be fair to think that this has a strong opportunity of being valid. Because look, you've got the wave up, you got the ABC correction, you got the wave up, you got the ABC correction, and it's here's mountain peak. Again, it's very reasonable to think that this is going to go down further, but it doesn't. So it's easy to go, look, here's an opportunity, and yet it's invalidated. Is third spike, final peak, final bounce, and a breakout. So now what will stop you getting caught here is when you zoom in, and I know this is on the 4 hour. Now if we go down to the 1 hour, now we got to go find this. So I know I'm layering in the arcs, and but I'm doing it because it's helping us again with the context. Okay, the context here is important, yeah. So this is that's the 4 hour there. Here is the 4 hour there. Now here I'm after coming down to the 1 hour. I'll zoom in on this. Okay, so here's the ABC correction. So this is the correction down, yeah. Now here is the Elliott wave back up, and here is the ABC correction down. Okay, and to get an idea of where that's going to come to is I will put in the fibs here, and just as an indication, just to see if it measures up, look, here's the Elliott wave up, here's the ABC correction hitting the golden pocket. Okay, so now if this hits the golden pocket, this is telling me that this is potentially the bottom. Does that make sense? That it's not going to go down any lower. So that's one thing that I would check. Is another is there's the bigger wave here, the bigger Elliott wave here. Again, I would bring it down to the bottom here. Computer's a bit slow. So again, the correction here is it's come down to the 0.5, the 50%, which again is very common. Didn't hit the golden pocket, but it hit this, which again is giving me an indication that this is complete. This is complete. So part of what I'm thinking here is that this is complete. So I'm not thinking that this is A, this is B, and that we're heading down for a deeper correction into C. I'm not thinking that. That would be one of the things I'm looking at, is that maybe this is going to come down and I'll get a bigger correction on the ABC. So that's what I'm checking for, yeah? This will be the process that I'm going through. Equally is that if I'm calling this A, I'd be calling this B. Okay, so now I would do a check here. I would do a check here just to see. from B here down to A here. Oh, is that there? There's that there. Okay. And again, I'm looking for this bottom here. So between B and A is my midline that I'm always looking for, is that the average is the 414. Sometimes it hits the 618, sometimes the 272. When it's really strong, it can come down to here. But look, it's already hitting breaking the 414, nearly the 618. So I'm very confident and comfortable that this is the ABC correction and it's complete. That this is not A and then this is not B. Because if it was, that would give me an indication, and I'll show you now. If this was A and this was B, so going from A down to B, I could be thinking to myself, 414 is this here is telling me that there's a drop down, and that even though this target is giving me down here, I could be looking at going, this could possibly go down to the 272 as part of this ABC correction. So now in the context is this is complete. Therefore, this Elliott wave is got the correction. This correction is going to be just for this Elliott wave. It's not part of the greater one here, so to speak. So that this here, whatever this gives me here, is telling me that this is going to be its bottom here. So that this is its ABC correction. And that it's a bottom, and then off we go. Does everybody understand what I just did there? Do you get how I checked the context? So that we're not getting caught in a head and shoulders that invalidates itself. Okay? So now if this is the first time you're seeing me doing the arcs and the fibs like this, is don't worry, I'll be doing repeated sessions over and over and over. But why I'm showing it to you is that when you're mapping out patterns, is how do you check that they're valid compared to invalid? How can you trust them? And that you can help, the patterns can help you with your measurements, but trading the patterns on their own and not double checking their context is you could be opening yourself up to getting stop lossed out. Okay? So I want to go and find a head and shoulders, cup and handle. I want to find some juicy patterns that we can. Oh, okay, so there's one there. There's an inverse head and shoulders. There's a nice sweet. Actually, there's two. Geez, we're getting spoiled now. Getting spoiled. Okay, so is here like this. There's another one I want to look at, but I'm just showing you this one, yeah? So this here, inverse head and shoulders, and then you take this, again, then you leave a little bit on, and then there's your target, and you've hit your target, okay? And then you're in there, and look, no testing of your stop loss. But let's zoom in. Let's zoom in and see if we still got that. Did it break out? Retrace, and then do its thing. This is always the challenge. Always the challenge with the patterns is that when do you actually go in? So this shoulder isn't confirmed until here. So all this doesn't matter. Doesn't matter. This isn't you looking for confirmation here. This is you looking at it going, okay, it's confirming the support or the resistance line here, but you need to see it come away, create another shoulder before it goes. And again, this shoulder is massive compared to this one. Some people might argue that it's not a valid head and shoulders. So here the breakout's already, it's already taken off. Okay, so you didn't have that same test. Okay. And again, look at this, look at this, look at this. It comes back down. Now your stop loss is getting challenged here. Your stop loss is getting challenged. And then this is where you collect your profit here. So again, it's quite possible that you would have got knocked out of this unless you saw that, look, this is going up, you see it dropping, you might just go, I'll take my profit here. Somewhere along the way here, you see a pump, you see a pump, you see a pump. Now it's dropping. Okay, I'll take my profit. And again, that's you having to mind the trade and make sure that you're paying attention. Yeah. So here's a much tidier one, in inverse head and shoulders. And again, here we go. And you'd even see the double bottom on this. This is what I think is what's going to happen now. I'm waiting for this. I'm waiting for this on XRP. But I think Bitcoin, Ethereum, I think a lot of coins are going to do this double bottom and then take off. So again, it didn't reach the target, even though I was very generous here. It didn't reach the target. It didn't reach the target. So now, what's the context? What's the context that we look at that and go, well, why didn't it meet the target? Why didn't it meet the target? Okay. So now here is, look, we have the Elliott wave down, and then we have the 3 steps down. This is an Elliott wave. This is an Elliott wave up, and here's the ABC. Hang on a sec. Here's an Elliott wave to here. Here's an ABC correction. Here's another Elliott wave to here. Here's an ABC correction. And again, here's an Elliott wave up. Okay. So it wasn't, I think we're back to the same thing, is skyline, mountain peak, second drop, third drop, bounces back up for a final peak, a final bounce, and then down it goes, breaks down. Is, if you understood this, you understand the context, is, and you're looking at it and you're going, well, where would you put your target in? How can you refine what you're looking at here and get more accurate with your target? Yeah, is, I suppose, a simple thing you could do. This is a really easy one to do, just straight off the bat. Is you look for support and resistance. Support and resistance. So you look for a solid resistance point. So when you're mapping this out, when you look at that resistance there, is conservatively, regardless of how high this goes, is you can put a target here and it's far more conservative. Yeah, is, it's not far off it. It's not far off it, but just as a simple way of looking at it, you've got your arc, you've got your skyline. You got your three spikes down is actually 3 spikes down, double top, first drop. Now you're on your higher highs on the way to mountain peak. Mountain peak. Now here is, look, here's the correction down, and it's also an Elliott wave. 1, 2, let me zoom into this. Make sure I'm seeing this correctly. I am. This is getting in the way. Is here is you have your peak. Okay, so the peak of the Elliott wave, 3, 4, 5. So now one of the things you'll be looking at here, if you're getting right into the nitty gritty of it, you can see your inverse head and shoulders is you're setting your target, but you're following the Elliott wave up. Is again, here's the W we talked about before on the previous chat. Here's the scooping. Remember the scooping we talked about? And then you have 3, 4, and then 5. Here's your peak. Now you have your new wave down, your ABC, but here's the Elliott wave of it. 1, 2, and then on its way down. So now, let's say you have your target here. You're following all this up. Maybe you realize this is your peak, you take your profit. Maybe you go, let's just see if it's going to go a little bit more. So now it drops down again. You go, okay. So either this is going to come back up again, or it's not. That's the peak, and now you're down into the correction. How do you know? It goes to here, it drops down, it comes back up, and when it comes to here, but it doesn't break it, and it starts dropping down again, you take your profit immediately. Because now you realize for sure, this is 1, this is 2, and we're on our way down for a correction. Does everybody understand? That you're layering in all your different indicators. To be honest, you'd see this. You'd see the W. You'd see the scooping. So you'd be going, listen, I don't need any more confirmations. What I'll do here is I'll take my profit somewhere here. Is I'll wait for the scooping. Is okay, here's this coming down here. Here's the retrace, but it doesn't break it. This confirms too. Here's your short. Okay, this confirms too. It's moving away. Hop in on a short, and then either pull your stop loss up above here, nice and simple, or you don't need to, just leave it. Let it do its thing. And your dollar costing. So look, you've gone in, you get your bounce, you get your retrace. Now look, it's moving away again. Look, your dollar costing in again. Okay? So okay, so let's stick to patterns. Let's stick to patterns. But again, I find it very difficult to show you the patterns without giving the context, because it completely changes. It completely changes how you engage with your patterns. Yeah. Now here's a triple top here. Here's a triple top. Now I'm sure there's patterns I'm missing because I'm just going along and I'm just picking the ones that are jumping out at me. Yeah. So here's a triple top. This is an easy one. Again, you leave a little bit of space. You set your target, and again, nice easy one. You've got your target. You've got it there. Yeah. Now, part of what is going to confirm this for you, and again, it's funny how we find ourselves in the same space, is look at the arc that's getting played out here. Okay, look at the arc. I would suggest this is possibly might be a 5-minute arc. I think it might be a 5-minute arc. and I would bring it all the way to here. So again, you got the steps down. Now here's the Elliott wave up. Skyline is you've got your 3 steps down, and now you have your mountain peak. And then again, mountain peak is you've got your 1 and your 2 heading back down for your ABC correction. So again, here it is here, and then down it goes, and this happens to look like a triple top, which it is, but it's also a mountain peak. And there you got your trade down. So again, that puts it in context. It puts it in context. And also is that if you don't see this, but you recognize the arc and you're playing it, is this helps a measure to check where's your third drop going to. So again, look, your third drop's down here. Is this pattern here is helping you just measure the whole thing out. Okay. Now I actually have a cup and handle page. So maybe I'll take out the cup and handle page just to go through a cup and handle with you, yeah? I've got to do my layouts. Okay. There we go. Oh, that's on the log. Okay, I'll show you the log one. I haven't looked at this for a while, yeah? Okay. Now where am I here? So there's a, excuse me. There is, now this is on the daily, by the way. So let me zoom into this. Is you can see that there's a cup and handle here. Now it didn't validate it. It didn't validate itself. Not yet anyway. What am I looking for? From here. Okay. There we go. There we go. And then here is the handle. Okay. And again, but it didn't validate itself. Not yet anyway. Now this is the log. This is logarithmic. So look at the length of this. It gets smaller because it's a log scale. It's a log scale. So it goes up in tens rather than ones. So watch this as I go up, look, it gets smaller. It's still the same. It's still the same measurement as this. It's just as it goes up, you see it getting smaller. It allows you to put a lot more on the chart. Yeah. So there you go. Look at there's that target. Hasn't met it, and then it sort of floated off, and it's doing this. Yeah. Okay. So now there's a bigger cup and handle here as well. Is look at this enormous. Look at this enormous puppy going on here. Look at this. Okay, so there's that there. Woohoo! Going on all the way from the peak of $3.29. This was the all-time high back in 2018. And here we are, $1.88 at April 2021. Okay. So now, and again, this is people's expectations. Is this here? They're putting in these things, and this is on the daily. So a cup and handle on the daily. You're like, yeah, wow, this is fantastic. This is definitely going to complete itself. And everybody had high expectations. We're hitting up to 141, 150, and then the arse just got pulled out of it. We're back down here for the moment. Okay, so now what we're looking for here, I'm just tidying this up, yeah? I'm just tidying this up. Eventually, this will find its way back up here. And eventually, it will complete this handle. Okay, so we get our double bottom down here, then we start to work our way back up. So this is $1.92. So $1.92, again, most likely we're going to get our breakout, we get a retrace. It'll probably come back from $1.92, it's going to come back to about $1.50, I would say. At least $1.50 before it breaks out. It's going to touch off this, it's going to get rejected, and then you'll have even the spike through, get rejected, come back down, and then it's going to have its breakout. So when this happens, is the breakout of this one is, I think it's this here. So now, just to make sure, see, it gets a bit tricky here. Let me do this. Let me do a new one so I'm getting it right. So from top to bottom, take it all the way here. Oh, it's that one there. Okay, it's that one there. That's the log working. So now in this breakout this will take us all the way up to $3.74. So we'll have the breakout breaking the all-time high. We'll get a spike out through this, and most likely it's going to come back down a little bit, because anytime you hit the all-time high, there's generally a rejection of it as well. You break through, it gets a little bit of a rejection, and then it works up. It works itself up, yeah. So now that's the big cup and handle that's playing out on the daily, yeah. Has anybody any questions? Does everybody get the general shape of the cup and handle? And basically it's a scoop, and this can happen many ways. You can get lots of stuff going on here, but what you're really getting is a top, a bottom, and another top. You get another bottom, you get another top that comes up and meets this again. And again, it has that action of a cup and then a handle. Okay, and that's the cup and handle. Okay, now I have another one. I have another cup and handle. Let's open up that one and see what it says. This one here. Okay. And let me just tidy this up because you can see it clearer. And then save. There we go. Okay. So and this is without log. The logarithmic is down here. This is without logarithmic, yeah. And again, on this one is I suppose it's the same. It's the same. It's this cup and handle. I thought I had more. I thought I had more cup and handles in. Okay. Okay, my apologies. Okay, let's go back to Bitcoin.
So how often does the cup and handle usually make a positive response?
You mean validate itself? How often does it actually come true?
Yes.
Yeah. Let me answer it. Let me answer it this way. Now think about what I said about the context, because the context makes such a difference to it. Yeah. Is when you can recognize the trend, and again, you always hear the comment, the trend is your friend, is cup and handles are more likely to play out on the way up. I think I just see one. There. Oh, hang on. On the way up. Where an inverse cup and handle is more likely to play out on the way down. So if you get a cup and handle on the way down, it's less likely to validate itself because the trend is down. Where I think this is a nice actually head and shoulders here. Sometimes head and shoulders and cup and handles can look very, very similar. So I'm zooming in here to this one here. So now some people would trade this as a head and shoulders. Okay, we were looking at it earlier on as a W, but you could also trade it as a head and shoulders, go for the bigger trade. So you can see it here. So you get one person posting that they see a head and shoulders here, and again, bit of fat on the bone, and there you go. There's your target. Okay, and again, look at how you have your breakout. You have your breakout here, your breakout candle. Look, and then it comes back down, and then it comes back up, and then up it goes again. So you got to be, if you're going to trade on confirmations, is you have to wait for the real confirmation. So as much as this is your target line, is here's the breakout candle, is here's the retrace. This second candle, this was red first. It retraced red to here. There's your back test. And now when it comes back up and it breaks this, that's your confirmation. If you're going to trade the confirmation, that's what you're looking for. Is just as an example. Now, some people would say this is a head and shoulders. Is you could also trade it as a cup and handle. It's still going to be the same target. You're still going to have the same target. Oh, wrong one. That's triangles, and where's my arcs? There's my arc here. And maybe the handle on this is pretty big. The handle on this is pretty big. So maybe I'm stretching to call this a cup and handle, you know, more so a head and shoulders. But you get what I'm saying. But the target is still the same. You're still measuring from the top to the bottom. Leave a nice bit of fat on the bone, and then there's your target there. So you're hitting your target. And then look at how much. Look at where this is. So you've left yourself a bit of space. Where if you brought this all the way up, look, you're right in the line. So you go, look, it's obvious that if this is going to validate itself, it's going to reach this line. So maybe you could be a little bit more confident. Go, look, I don't have to be overly safe here. Is what I'll do is I'll look to take profits somewhere around here, a little closer to it. And even if you know it's going to hit this line, it's always good to leave it a little bit away. It's always good to as a discipline and a habit. You know, is just a good thing to do. Okay. Does anybody have any questions? Has anybody any questions? Okay, so I think a good thing for you to do to start to spot patterns is to go through your charts, you know, and start to mark out where you can see them. So as an example is just to train your eye. Just to train your eye is whether it's valid or not. There's an M. Just get used to looking for them. Here's an inverse head and shoulders. Okay. Here is an inverse head and shoulders. There's another one. Okay. Here's a W. Once you start looking, and again, this is invalid, this is invalid, this is valid, this is valid. They validate themselves. They came to fruition. There's a little m here, or there is a bigger m. And again, it was invalid. And again, I think in many ways that this is obvious here, because it's a good way to train your eye. Look, this is an inverse head and shoulders, and it's a bottom that's going up. So contextually, you can look at that very quickly and just go, yeah, it's obvious why that worked. Look, you're on the way up of an impulse wave. This is W. Yeah, it's obvious that you can see that why this would work. Here's an M here. Well, it's obvious why this didn't work. So logically, you're starting to see why some will work and some won't. And you could do this. You could do this like I'm doing this now, and you can have a bit of fun with it. And again, you're just training your eye. You're just training your eye. Look, here's an M. Here's an M, and you could say that this one is valid. It validated itself. You know, you want to be a little bit conservative on the bottom, but it validated itself. Now this is on the 4 hour. If we went into the hour again, you'd end up seeing more of them again. Yeah. I stopped looking for I stopped looking for the flags. So better start doing some flags. Yeah. So there's a flag. Here is what's this called again? An ascending open triangle. I think this is what this is here, yeah? And they have a tendency to break up. So valid is here. Here is a head and shoulders. Invalid. Why is it invalid? Because it's cresting 3, 4, 5, and 4 didn't want to go that far. So you can look at this and go, okay, no, you can just see it's not going to do it. But you can recognize the pattern. So now you can see I'm flying through them now. And this is a really good way for you to do it, just to get used to it. Now let's find some inverse stuff. We want inverse. Here we go. Is potentially here. I'm not sure. I think I might be stretching it a little bit here. This is potentially a bear flag. Well, maybe I'm not. Maybe this is what's frightening people. Oh my God! Is taking this here, putting this here. Oh, maybe I'm not. 40,000. Ooh. Okay, maybe 41,000. Maybe that's a bit more realistic than I thought. Okay. So yeah, this is where some people are looking at it going, it could go there. Okay, here's one that was invalid. You look at this. And again, this would be a breakup, but it didn't. Is a broke down. And again, more so because again the trend is, you see the trend is down. So if you see something like this, is again you wouldn't trust it, you know. That might be an ugly M. See that ugly M there, or is maybe this way. There you go. But it's back to the same thing as when it cuts down there too much. Maybe is again you will get knocked out here if you'd have gone in for this. If you go in, your stop loss is here. Look, it drops down, comes back up. You get knocked out, and then it drops down. So, here's one. Here's one here. There's one there. There's a bear. This one here. Here's a bear pennant, I believe, or bear flag. And again, this one would be validated. It'll take its time to kick on. Is you could be getting challenged in your stop loss. If you take this here and you put this here, so this would validate it. The only problem is that if you're entering here, is look how much it's pushing back on the price action. So unless you have bring your stop loss right up, is you could be getting knocked out here. Now the question is, why would you bring your stop loss right up here? Why would you just let it be up there and let it do its thing? Is the reason why is because you can see here that without looking at the arcs too much, is a 3, a 4, a 5. You can see the Elliott wave completing here. Okay, so now we're into the ABC correction. Actually, this is 3, this is 4, and that's 5. Okay, so now you can see the 1, 2, and then it's on its way down. So you can see that this is 3 taking off. You missed 3 taking off, but yet now it's in a consolidation phase before it drops. To be honest, if I saw this, is where I'd be looking to go in on the consolidation phase. Oh, bring it back. Where I'd be looking to go in on the consolidation phase is not on the breakout. Again, back to the confirmation of the breakout, is that here it is consolidating. I want to go in on one of these candles. I want to go in on one of the tops here. If I went in on the top here and I pull my stop loss back just above this line, even a small stop, no stop loss or a stop loss right here, I'm not challenged. Not challenged at all. Let it do its thing, and then it drops. And while I would see that this is also a potential target, is I would know that this is a far greater target here. So maybe over the 4 hour, is this went on from the 15th of November at 8 o'clock, and it hit its target at the 26th of November at 8 o'clock. So 9 days. So it's a long time. This is one of those fecky ones where, look, it's going sideways, you know. And you're like, do I want to be in this for 9 days? No. is it drops and it retraces. You go, okay, I'll stay in, let it do its thing. When it drops again, you might decide when it drops here, you go, look, I'm going to take my profit here. As much as I know it's going to go all the way down here, is maybe I just want to take profit and not be in a trade for 9 days just to catch this. You might decide that I'll take my profit now, even though you know it's going to go there. And again, that still would be, if you took your profit here, it's still 9%, 9.1%, 10x is 90%. So let's say you took your profit here rather than waiting, because it's gone on for days. So now it was the 19th, and you take your profit on the 23rd, so 4 days later, and you're making 90% profit. So again, if you're trading 1,000 there, it's 900 in the 4 days. Or if it's 100, it's 90. Or if it's 10,000, it's 9,000 in 4 days. Same strategy. Once you've got it in and it's working consistently for you, it doesn't matter whether it's $100 or 10,000. And I say this to you guys all the time: is trade small amounts until you get your consistency, and then it doesn't matter how much you trade. So the real value for you in trading is consistency. Is not the amount that you put into any given trade. The real value is consistency, because when you have that, again, it doesn't matter how much you're putting in. If you don't have consistency, then it matters a hell of a lot how much you put in. Because even if you're putting in $10, you're consistently going to lose $10. So if you can't consistently make profit on $10, I wouldn't be putting in 1,000 or 10,000. Because if you're inconsistent, you get caught. It's going to cost you a fortune. Speaking from experience, it costs you a fortune. Then you spend some time just having to make the losses back before you get into profit. So anyway, but everybody makes their own decisions. Does anybody have any questions? Does anybody have any questions? Can everybody see how many, when you start looking at it, can everybody see how many patterns are actually there? There's a lot. And if I go down to the 1 hour, and I zoom in on the 1 hour, same as the arcs, zoom in on the 1 hour, and let's see what we have. Again, there's a, and you'll notice where you start to recognize things. Do you see when there's a spill? Looks like there's a bit of a W here. There's a W there, yeah. There's a W there. There's a W there, and again, that would validate. So that's a valid W. But you'll notice when you've got the spill down into the arc, the 3 steps down, this is where you get W's that are validated. Okay, is here. Trying to see, is there a head and shoulders in there? I think there is. Yeah, there we go. There's a head and shoulders there. That's valid. So a shoulder, head, and a shoulder. There you go. Now these are on the 1 hour. So this W showed itself here and confirmed itself here. So you go in the trade somewhere around here on the 4th of December, and there it is on the 5th of December, the next day. And that's a trade of about 3.5%. By 10 is 33%. 33%. Okay, that's in a day. Here's a head and shoulders. You go in on this trade. Remember, these are on the hour. There's you take your profit there. This is 4%. Okay, by 10 is 40%. And again, you go in on the trade here. Now again, if you're trading position, you'd probably go in here or you'd probably go in there rather than waiting for this. So, but a 40%, so let's say you entered here on the 6th and you're taking your profit. Let's say you take your profit here is on the 7th, the next day. So these are day trades. You go in one day, you make your profit the next day, and it's 40%. So again, on 1,000 it's 400, on 10,000 it's 4,000. Okay. Again, I'm looking at couldn't really call that an can't really call it head and shoulders either. What you might call it is an inverse cup and shoulder, cup and handle. So now, if I went in here, now this is if you're trading on just on patterns all the time, this is what you're looking for constantly, yeah. If you know Carl on the Moon, he's a big pattern and channels trader. He's just constantly trading them all the time. Is this it? I'm not sure. Am I getting this right here? Yeah. Again, I'm not so. Is that there? Again, maybe you bring this up because this needs to go up here as well. Okay. And again, you're taking your measure. And again, you gotta be not too greedy with the target. So here you are. Now turn it back around. Okay. So again, your challenge here, and again, this is what gets messy about the patterns, is definitely look is as you can see it here, it gets here, look, you take your profit. However, is you got all this going down. You go, oh, I'll wait. Well, some people will just take this here. But again, if you wait, now you look, now you're in a stop loss battle. You're going to get knocked out of your stop loss, or you're in a stop loss battle and your stop loss is up here, and you're waiting for it to come back down again, and all very stressful. And again, look, you can collect your profit here. Again, that's one of the challenges with pattern trading and the context of things. Here again, an inverse head and shoulders, but again, it's invalid. That one there. Okay. Okay. Again, look, you can see that on the even on the hour you can see this, yeah. But now on the hour, if you wanted to, is you could also swing trade this, but they're shorter trades. They're shorter trades. Maybe you bring this up to here. There. Once you've got this touch here, you got this touch, you got this touch. So you go on a short here to here, and to be honest, you would probably have it like that. So you go on a short from here to there, long, short, long, short. And again, every one you go in is when you go in, you pull your stop loss below the line. That's the simplicity of it. You pull your stop loss below the line. Maybe you pull your stop loss a decent amount below the line and you allow the trade to happen. Same with this, above the line, and allow the trade to happen. So you could have 1, 2, 3, 4, 5, 6 trades here over a period of, well, here's the days. The days are from the 29th of November to the 1st of December. So 29, 30, 3 days. 3 days, you've got 1, 2, 3, 4, 5, 6 trades over 3 days. And each trade is worth approximately, let's say 3.5%, again by 10. Well, let's say you're losing 50% on a bit of space. So let's say it's 30%. So 30%, but then 6 trades over 3 days is 30% by 6, 180%. So again, if you were trading $1,000 there, is at the end of that 3 days is it could be $1,800. And again, they're quick trades in the sense of each one of these candles are an hour. So there's 3 hours. Okay, there's a lot more than 3 hours. Is again, that's 5 or 6 hours. Look, that's 2 hours. You go in on this one, you nearly get there. It's going to go on for a day until you reach it. And then this one is 1, 2, 3, 4, 5 hours. So you've got trades there that last 3 hours. And then you got trades there that look like they're 7, 8, 10 hours, 12 hours or more, yeah? Okay. So guys, do you have any questions? This is really just an introduction just to show you where how to see the patterns, and then that once you get into it, there's actually quite a lot of them. There's actually quite a lot of them. Here's another one here, look. And again, this is a bear flag. So here's a bear flag. There you go, look, you're hitting your target. And at the same time, it sets up another one. So there's one trade, and look, take your profit. Look, here you are setting up another one, and then you go put it here, and then again you're hitting your target again. Yeah, is excuse me, is how do you have confidence in the context of this? Is 3, 4, 5. You're after reaching a peak, okay, and then the very nature of this is look at the drop here, is 1 or else 1. And then 2, and then on it goes. So you know that this is going into an impulse wave. So it's on the way down. So these bear flags you can be confident in because they're on the way down, because they're in the right context. They're in the place in the chart where they'll work out best. Or look, here's your bull flags. This is where you can have the confidence in them on the way up, yeah? Is your W's. Remember, your W's, when you get a drop, your W's have a tendency to be at the bottom and working their way up. You also get M's at the bottom here. Not so trustworthy to trust an M here, but you could trust a W here. So W and up it goes. Because in the pattern, it's bouncing to go up. Is your M's are more trustworthy on the top. Don't trust your W's here, more so trust your M's. Don't trust your M's here, trust your W's. Bears on the way up, or bulls on the way up, bears on the way down. The same with cup and handles. In inverse head and shoulders, that actually looks potentially like an inverse head and shoulders, is on the way up. Cup and handle on the way up is now head and shoulders on the way down. Okay, inverse cup and handle on the way down. Okay, so I would suggest a starting point for you is pick W's and go, okay, I'm going to train my mind to see W's. And then in all the mapping that you're doing is layer in W's. Everything else you're doing, you're putting in your arcs, you're layering them through the different timelines, you're putting in your Elliott waves and your ABC corrections, you're putting on your fibs and you're mapping out your targets, and you're going in on your entries and you're looking to trade, so you go in. But while you're doing that, you're checking your support and resistance lines, you're checking your channels, you're looking at your divergence lines, and now I want you to put W's into it. Start to see W's, and you'll find your W's at the end of a drop. So when you see at the end of an Elliott wave, an impulse at the end of it, you'll catch your W's, most likely your valid W's at the bottom. So just start looking for them, and then back test it, and just get used to seeing W's. And then once you've got W's layered in and that you can recognize those, then do M's. Let me start working on the M's and do exactly the same thing and go, where in the chart are the M's more valid and least valid? So on the way up, the W is more likely to be valid. Doesn't have to be, but it's more likely. And on the way up, M's are less likely to be valid. Okay, less likely is unless you have a capitulation. Now the M is more likely to be valid because look, you're going to correction, and the W is not likely to be valid here. But once you get the bottom of the correction, the W will be valid. So will your bull flags. Okay, your bull pennants, your bull open channels, they're more likely to be valid. Okay, and then again, I'm repeating myself on the way down. Is the story? So just start picking. excuse me. Just start picking your patterns, and systematically over the weeks and months, start to layer them in as one of your indicators that you can measure and test, and it will either support the rest of your indicators or it will challenge them. And you want to have your indicators doing both for you. So, okay. So last time I'm going to ask you, anybody any questions? Okay. Yep.
Is there a head and shoulders on Ethereum 4-hour chart at the end?
Okay, let's have a look. Let's have a look at Ethereum. Let me pull up the Ethereum chart here. Yeah, because I know
it looks like an N, but
yeah, like I know people are talking about I think a head and shoulders potentially on Bitcoin. And if the second shoulder works, people are terrified because it's potentially sending Bitcoin
down
into hell. Oh, okay. So again, you can see people are getting very anxious because it's one of those times where there's a deep correction, and people are getting freaked out that the bull market is over. And then think about all the people who've put so much money into the market, and then they think, oh my God, this isn't going to pick up for another 2 or 3 years. So there's real genuine fear, and it's pulled down to that, because it's to shake people out. The pattern naturally goes that way, and the people who know the pattern and know how to trade it they'll hold firm. I have to change screens. Okay, so I'm changing to Ethereum. There we go. Okay, so here's Ethereum, and here's Ethereum on the 4-hour. Okay, so
just a small head and shoulders from December 4th.
December 4. Okay, here from this.
Yeah.
Oh, this and this and this.
Yeah.
Um, yeah, that looks pretty reasonable. Yeah, it's got two shoulders. It's got a head. Again, leave a little bit there, and look, it brings you back down here. But again, it's back to the double bottom. It's back to the double bottom, and the target of 3.4. Again, I think I've posted this on the trading floor that I think Ethereum is going to go back down to 3.5 or something, because I know this was 3.4. So I don't. I think it's definitely going to go back down here, and then it'll lift off again. So yeah, I think there's a I think there's a double bottom coming in. Yeah, and well spotted. Well spotted that's it there.
Okay.
Yeah. I'm waiting on this. I've got the same thing going on XRP, and I'm just like, for Christ's sake, will you just do the business, do what you need to do, and then let's get on with this, you know? So
yeah, exactly.
So
no, that's great.
Yeah, you're very welcome. And that's I think
I'll keep my eye on that.
Yeah, well, there's a trade for you. There's a trade for you. And look at the if you look at, here's also a just while we're here, sure, look. There's a bear flag. Or actually maybe a pennant. Let's say now again, depending on how, is it because we've already had a look at this, is I'd probably put this here. Is again, it's just, but I'll put it here. I'll put it at the top there. So again, look, back to the same space.
Yeah.
Back to the same space. A great opportunity to put a short in here for say 3.5, 3.6, just to be safe.
Yeah. Okay. Oh, yeah, that's looking good.
Yeah, well, hopefully that's what happens. Hopefully, if you think about the FUD, people are saying, "Oh, it's all the way down. It's all the way down." Like if it was to go, let's say it was to go into this much bigger correction, which it's too soon to go. But if it did, you'd be talking about all the way back down at 2.5, or maybe a little bit earlier, 2.5. I don't think it's going to go there, and the reason, the very simple reason is look, here's a new arc. So there's 3 steps to it. 1, 2, and again, this is the big. Do you remember on the we talked about the big Elliott wave? Is you get the big W in the middle of the third wave. So this is going to be looking.
Okay.
You're going to get this big W, and then it's going to come up, and then you're going to get these 3 scoops, scoop, scoop, scoop. You get another retrace, and then you get your blow off top. So there's loads to go. So this is only 1 step. Look, 1, 2 on a big wave. 3 is only kicking in. 3 has a lot more to go, and it'll get all the way. I think by the time it's actually done, it'll be much closer to 9 or 10,000, if not more, by the time it's done.
Yeah.
So this is just a correction. It's not the final thing. So yeah. And I think part of the reason why people are getting freaked out is, the cycles. They talk about Bitcoin and the 4-year cycle. And this is why people talk about it. So the Bitcoin halving every 4 years. So what happens is that the miners every 4 years, the miners get paid. The miners get paid half of the coins they got for the previous 4 years. So there's a halving. So if a miner mines a Bitcoin today, he'll get 1 Bitcoin, say. The same amount of work that he does after the halving, he'll only get half a Bitcoin. And what that does is that pushes the price up of Bitcoin. So there's a natural inflation built into the system. That's why Bitcoin keeps getting more and more expensive, because there's less and less of them coming out, and there's a finite amount of them, 21 million. So people are mapping the cycle through the 4-year halving. But that's not how an exponential wave works. Is an exponential wave works like an S. So the first wave is short and sharp. The second wave, and then the X's, the amount of X's Bitcoin went, the most X's it ever went was on the first wave. It went up many, many X's, thousands of X's. So on the second wave lasted longer than the first wave, and it didn't go up as many X's. Still thousands, but there's a difference between 11,000 X's and 9,000 X's. So the third wave is it lasted a little longer again, but less X's, because the S curve is starting to lengthen and flatten as it goes. So now we're in another cycle where the cycle is getting extended more, but everybody has it in their head that this is the end of the bull run because it's the 4-year cycle and it must be that way. And they're measuring it on a linear 4-year cycle, a linear thinking, when an exponential curve doesn't work in a linear form. It works in an exponential way, so that every time it peaks and troughs, the next peak takes longer to reach with less X's. So now the bull run is most likely going to run for at least another year, possibly more than a year. So we're not even, I'd say price-wise, we're not even halfway there with regards Bitcoin and Ethereum. But it's just going to take longer. And then you see these corrections is, look, you wouldn't, people talking about, seldom you get a 70% correction in Bitcoin or a 50% correction. You get lots of 20% corrections, very seldom 50s or 70s. Those 50% and 70% corrections are becoming more regular because the cycle is stretching out. Is you're getting more dips, more corrections, and then it goes again. More corrections, and it goes again. And this is where people are getting caught. Look, there's a deep correction, and people are getting freaked out because this is meant to be the end of the bull run. Linearly, but exponentially, it's not. It's just going to roll on again. It's probably going to be another wave. It's going to dip, and then most likely you're going to have another one. So I would say Ethereum, Bitcoin are going to have at least this daily arc that they're in now, which is going to take months to complete. And then they're going to have that dip, and then there's going to be at least another one, which will bring us up to the end of next year, possibly into 2023. So,
okay.
So yeah, and that would match the exponential curve, not the linear 4-year cycle. So that's what I think was going on, and I think it's the maturing of the market, shifting from that linear phase to basically a Fibonacci. I call it a Fibonacci state of mind, because the Fibonacci's are mapping it out beautifully. When there's no price action above, Fibonacci is your guide, because Fibonacci is those impulsive waves. It's those exponential waves marked in impulses up and down. So that's why the fibs are so brilliant, So,
okay.
But anyway, I'm waffling away. But if you're stressed, don't relax. Just be patient.
Oh, yeah.
Just be patient, and don't sell. Don't sell. Don't sell.
Yeah.
All right.
Yeah. Yep. Sounds good.
All right. Super duper. All right, guys.
Oh, thank you.
I hope that was helpful. Again, it was. You'll notice there's an awful lot of introduction, and I'm repeating stuff over and over and over and introducing it. Is as it goes along and gets refined, I do expect and I do hope that you start asking more detailed questions. So I know you're feeling out a lot of stuff, but throw in the questions. Either type them in or put up your post your stuff and ask a question, or ask it here. And the more refined your questions are, the clearer the response I can give you, and the better it also lets you measure where you are in it. So when you ask a question, it's a very good way of recognizing how well you're getting on and what you need to work on. So it's a very good way for you to get a good sense of, where you are in all this, because you need to have a measurement in yourself about how do I measure myself off about how well I'm doing. There's your consistency, there's your success, but then there's also your well-roundedness. You want to be well-rounded. You want to be able to trade up, you want to be able to trade down. You want to have your set of indicators that work for you, that give you a really clear and well-rounded picture. And while it does take time, is the more feedback you get, the better. So the more questions you give me, the more feedback I can give you. So, okay. So listen, have a great day. Have a great evening. And I've recorded this, so give me a couple of days and I'll have this one up as well. Okay. All right.
Okay, thank you.
Keep well. Have a good one.
Thanks, Roy. Cheers.
Cheers. Bye-bye.
Thanks, Roy. Thanks.